Well, data from the National Bureau of Statistics shows that Nigeria's headline inflation rate declined to 33.40%. Well, that's for July 2024, down from 34.19% in June 2024. Now, this marks the first decline in headline inflation since December 2022, when it last dropped to 21.34%. According to the report, the headline inflation rate decreased by 0.79% in July 2024 compared to June 2024. On a month-on-month basis, what do we have? We have inflation in July, which was 2.28% lower than 2.31% recorded in June 2024. Let's get talking now. I'm being joined by Senior Portfolio Manager with AfriInvest West Africa, Mr. Babajide Atolagbe. Good afternoon, Mr. Atolagbe. It is good to have you join the program.
Good afternoon, Tolu. The pleasure to be here.
Well, we see the first decline, just like I said in my introduction, since 2022. That's like 2 years now. And we see this first decline in inflation figures. First, let me ask that, what were you expecting? And how would you react to what you've seen from the NBS?
Thank you, Tolu. Well, the recent inflation number we saw, yesterday simply reflects, our expectation. And I'm saying this because globally, inflation has, moderated to a significant extent. Speaking of, in economies, in advanced economies like that of the US, in the UK, in Europe, and even some emerging economies, inflation has moderated from the pandemic levels and the Russia-Ukraine crisis levels to pre-pandemic levels. Just that Nigeria is just experiencing the first, moderation in inflation since the last 19 months. And it's coming this late simply because of the reformations that were done to certain sectors of the economy, speaking largely to the subsidy removal as well as the adjustment in the FX market. So I would say that this moderation we're seeing has been long anticipated. Most economies are already seeing that moderation, but for Nigeria, we're seeing ours only now because of some certain factors. A deep dive into the number, when you decompose the number further, we see that food inflation, most importantly, has moderated. It was previously within the axis of 40%, but this last month number was 39.4%, which shows a slight moderation. And I think I'm starting with food because of the situation of things in Nigeria. Nigeria has large population that is below the poverty belt, right? So food inflation, food crisis is a major problem that we're grappling with in this part of the world. And prior to now, inflation has been trending upward due to the fact that inputs are pretty much expensive. And also, we have insecurity in food producing regions. We have, some infrastructural challenges. Also, we have, flooding crisis in areas where foods are majorly produced, and that has led to shortage of food supplies. But the recent moderation we are seeing in food inflation is largely tied to the fact that demand has somewhat moderated from the Eid al-Fitr celebration period, whereby demand was relatively elevated. So the fact that demand has moderated post-celebration period, coupled with the fact that globally inflation is moderating and even the US dollar is also moderating. So we're seeing a pass-through effect on Nigeria's imported inflation, particularly to the food side. So we combine those two factors together, it accounts for the slight moderation in food inflation, and that has a significant chunk of why we see a 33.9% inflation for the month of July.
I like that you started with food, and I think it's key that we stay with food. Everyone is interested. We also know the directive from the president. My first report on the show today talked about the modalities for the waivers and excise duties that won't be paid on some basic food items. What do you also make of that, and particularly impact on our scarce foreign exchange?
Yes, that's a sound development because from where we sit, we always looking for ingenious, approaches to reduce, the inflation crisis in Nigeria. I mean, the popular approach has been to hike interest rates, and we've seen so far that has not really delivered any major or material impact in terms of, bringing down inflation. So the fact that we are targeting those key areas that are, that are responsible for the uptick in inflation, particularly food inflation, is a smart one, right? While we may not see the impact, yet, I think that impact may be felt more in August, the inflation numbers, when we see it in subsequent weeks, because Nigeria is import dependent, and when you look at our import numbers, other than energy, food also account for a significant chunk of what we import from the rest of the world. So targeting that, removal of all those tariffs, custom charges would have a direct impact on the landing price of those those food items, and that would also put some sort of relief on the selling price to the economy. So it's a good approach, and I believe that if that is sustained, that would play a significant part in inflation nutrition in the next couple of months. However, that also comes at a cost, because Nigeria largely gets a significant chunk of revenue from the custom end as well. So we may be foregoing some revenue in order to also save the face of inflation, and also save the currency. So it's a trade-off, and I believe that it's a trade-off that will pay the Nigerian economy in the short term, while we can always adjust our revenue projections subsequently.
We saw in the speech of President Bola Tinubu towards the end of the protest, where he talked about revenue improving, the ramped up revenue first quarter of the year, about 9.1 trillion naira. Debt service has also reduced. But for me, I would ask you, when inflation starts to decline this way, many would say, since some reforms are paying off, what would you say about these reforms moving ahead? The fiscal and the monetary side seem to be having this handshake, or that understanding that they need to work together better than what many say we used to have before now. But what would you say really is happening at both sides, the fiscal, the monetary side, and what more can be done to make us continue at this pace?
Well, a very good assessment of what both parties are doing. Starting with the fiscal side, I think the fiscal side, most of their policy disposition has been towards revenue mobilization, and we're seeing what they are doing from the tax funds, which is sort of brilliant, right? Also under revenue mobilization, we're seeing how they are ramping up production gradually, even though production level is not where we want it to be, but we've seen some traction in that space. So revenues are coming in from that angle. The only area of the only gray area from the fiscal side is largely the spending area, right? The expenditures are enormous. Like it doesn't match the revenue trajectory. So it simply tells us that budget deficit is going to keep on getting wider and wider and wider, and that is largely in itself inflationary. So while they are chasing or trying to amend, the revenue, leakages, I think they should also pay significant, attention to how these, monies are being expended. And that is that for the fiscal side. Meanwhile, for the monetary side of things, it's always good to acknowledge the success that they've been able to achieve, because to a very large extent, we've seen stability in the currency market, right? The dollar has been trading within the range of 1,005 to 1,550 for the most part of July. Not until August that we are beginning to see 1,006 levels, right? So we've seen how the hike in interest rates has sort of managed the issues in the currency market, but while they're achieving that, the rest of the economy is paying the price for that hike, because the cost of borrowing in the economy is relatively very, very expensive. Even the biggest issuers in the market are raising monies at 28%, 27% levels. Even the government itself is raising money at 24% levels at the shortest end, and as long as 22% at the longest end. So it's really expensive at this period, while the central bank, the monetary policy participants are trying to anchor inflation, there should also be a significant consideration for the economy, because there's a level of interest rate that that you must sustain for you to achieve both your currency stability and also have that your GDP is still sustainable. Is growing at a sustainable pace. So that has to be managed. It's a risk. It's a trade-off. But the CBN has to sort of put a balance between risking an economic collapse while they are trying to save the face of the naira by hiking policy rate further.
Now, just yesterday, we saw the federal government launching a series of USD $500 million domestic FGN US dollar bond in Lagos. Many say this is a strategic move also aimed at stabilizing the economy. How would you react to this, Mr. Tolagbe?
Well, I think it's a strategic one indeed, because the alternative would have been that they would have issued Eurobonds in the commercial market, and I must tell you that it is pretty much going to be very expensive. I'm not sure investors have that sort of strong appetite for emerging market asset at the moment, particularly that of Nigeria. So I think it is somewhat smart to look inward and see how they can mobilize the USD in the economy for strategic reasons. But I must say that the gray area in this transaction would be that once the monies are mobilized, they have to be deployed to strategic areas of the economy that would ease inflation and that would support currency stability. We do not expect these funds to be used to service debt, and also used to purchase foreign luxuries. So it still boils down to how these assets are deployed, right? Of course, it is going to support our reserves, because monies gotten from these issuances will be used to sort out some liabilities here and there. But most importantly, it has to be directed and deployed to areas of the economy that would ease the current pain that the average in Nigeria is feeling today.
Let me take you back to where we started from now, inflation. And one thing that we know that has been driving inflation in Nigeria is energy prices. You know what's happening to diesel. Even as that today, I spoke to a guest yesterday, and he told me that he's buying from a filling station in Abuja, somewhere in Abuja, for over 900 naira. That's according to my guest, subject to confirmation though. But what I want to ask you really is, we thought that we had gotten to that point where that market will get competitive, and all of that. But looking at all this back and forth with regards to the downstream, do you think that we'll get a stability in the pricing of petroleum products moving forward?
Well, in terms of the price, stability of price in that market, right, I see a lot of, unaddressed, concerns, right? Because, the first question is, who is paying for the gap between the pump price and the landing price of, PMS? Because we do not believe that, PMS at 596 levels reflect the landing price. There has to be some sort of cushion that is being taken care of either by the NNPC or by whatever party in the government. So in terms of price stability, it's still a little bit unclear as to what the government is trying to achieve. But when we look at when we take it outside Nigeria, when we look at the global energy market, prices are relatively low compared to 2023, 2022 levels, right? And that is because of the fact that major demand from China and other bigger economies are not so strong. So oil price per barrel is still hovering around $77 to $83 per barrel, which is relatively, stable for the most part of the year. So I think what needs to be done in Nigeria to ensure that we also have stability on PMS is for the major importer of PMS in Nigeria, because for now I still think we still import. The major importer of PMS in Nigeria has to have consistent liquidity to be able to import from time to time, because if you don't have that consistent liquidity, speaking of USD, there might be some gaps in importation, and the gaps in importation will lead to a lot of hoarding activities, and then prices will begin to jump. So for us to have that stability, that liquidity needs to be provided, and I believe that is one of the reasons why the government is looking to mobilize monies in USD from different corners of the market.
Okay, now let's wrap up our conversation now, and of course have an outlook considering all these challenges we see. Analysts like you say we are starting to see that decline. Do you agree? And what should we be expecting moving forward? And what also are those things that needs to be done so that we sustain this squarely, specifically?
Well, I think that inflation will still moderate further, largely because we are transiting from the planting period to the harvest period, so that would also support food prices. And secondly, the USD is also falling due to the fact that there are lots of aspiration that interest rate would be cut down in the US, so that is fueling a decline in USD. So that also translates into some sort of strength for the naira, right, in terms of pass-through inflation. And lastly, I think that the CBN should also continue its intervention in the market. We saw the last intervention. If they continue its intervention in the market, it can mobilize funds and also distribute them to different areas of the economy to ease overall pressure. So I think that in the short term, inflation is likely to moderate, also due to base effect. But going forward, the fiscal side has to manage expenditure appropriately, while the monetary policy side also has to find other approaches to manage inflation other than hiking interest rate aggressively.
I must thank you so much, Senior Portfolio Manager with AfriInvest West Africa, Mr. I beg your pardon, Atolagbe. Excuse me. Mr. Babajide Atolagbe there. Thank you so much. I do enjoy your weekend. Excuse me.
My pleasure. Thanks.
All right, then. Thank you so much. Babajide Atolagbe there, Senior Portfolio Manager with AfriInvest